I'm going to give everyone a couple minutes to trickle in, but first of all, thank you so much for Windra for joining us. You're obviously representing Element Finance. Just to start us off, while the questions trickle in and people come in, could you just give us a little bit of a briefer on your background and then how Element Finance got started?
Yeah, I was prior to working in blockchain, I was kind of doing a lot of operations and manufacturing in Southeast Asia. I kind of stayed there for the earlier part of last decade, and then I transitioned into looking into blockchain and the economics around blockchain around 2016. I mostly stayed on the economic side, mostly around currency engineering, research around that end. And then fast forward to 2017, 2018, did a lot of project analysis because I felt like the space moved really fast. So I wanted to kind of stay in front of everything that was kind of going on. Transition into a short brief period of time of capital markets in 2018, 2019. Wanted to kind of see how the tokenized security digital asset space was kind of evolving, understand the infrastructure around there. Kind of transitioned back, early 2019 back into DeFi. And, because I felt like financial applications of blockchain made the most sense. And, we started Element in August or September of last year. So yeah, and
Interesting.
I've kind of just been working on Element since.
Yeah, so I'd love to hear how you guys came up with the idea for Element in the background there. One thing that's been fascinating to me is I don't know what the reason is. I'd love your insight, but it seems like these platforms that are tokenizing future yield are just coming about right now and in the last couple months. So why do you think it's all happening in this, 3 month or so window? Yeah,
Well, let me answer the first question about how our idea came about.
sure.
I think last year, you know, this was right after DeFi summer. Everybody was using all these yield farms, high interest rates. I think people were really thinking about, different ways of how to hedge risk and manage risk, how to anticipate what your rate of return is because you could see 24,000% APYs today and, on Kimchi Finance and then 10% APY the hour after. So, a lot of our ideas came around, how to kind of manage that risk, but also, how to kind of create more predictability in terms of what you're making in your
Yeah,
investment. Another issue that we saw in some of these major protocols was that just extremely high withdrawal rates. I think we were looking at statistics on Yearn, for example, and they were having at that time like a 62% withdrawal rate. So we were asking ourselves, how could we help that? How could we incentivize users to kind of keep their capital into a protocol and basically generate interest, but still give them the flexibility to exit. So that was kind of like initially how the idea of Element came about. The reason I believe that all these different protocols that are tokenizing interest rates are coming out right now is because we've all experienced that problem like late last year. I mean, I would say probably like around Q3 of last year because everybody was experimenting on these DeFi protocols.
hmm,
And now the reason that it's coming up is because we've experienced that problem last year, and then people just started building, and it's only up till now that everything is hitting mainnet and the products are ready.
awesome. That's great. And so with all of that said, could you talk a little bit about, how you explain element finance to people that might not be familiar? I think at first it's kind of a tricky concept for people to grasp. And then after they've seen the first iteration or just get the principle behind it, I think it becomes pretty clear. So just a brief explainer of how everything works would be great.
Yeah, sure. So Element Finance works. Our of course our main goal is to be able to bring attractive high fixed yield to the market. Fixed rates, I think, is our initial core focus. We believe that that's a way to really attract new consumers to DeFi, people that have never used DeFi protocols before. And the way it works is that when you deposit your assets into Element, you choose a term period that of your choice. It could be 3 months, 1 month, 6 months. We'll have different options, and your assets are essentially deposited into a variable interest bearing position, and you're issued this split receipt token, right? So if you go on Compound, you get like a CUSDC, which
Yeah.
represents the receipt token that is your deposit plus the interest. But we split those two different components into two different primitives. One is just your deposit, and one is just the interest that's accrued over that duration period of time. So, Justin, if you deposit 500, USDC into Element, and you want to give your interest away to somebody else, be like, hey, this is the interest that I'm earning for the next 6 months. You could do that. At the same time, you could give you could say, hey, this is redeemable for 500 USDC at 6 months. I just want to hold the interest. You could also do that. So there's a lot of different flexibilities that you could do with your capital. So that's
Awesome.
essentially, yeah. Sorry, I'm going to cut you off, but yeah.
No, you're fine. So just as a heads up, I see people in the comments right now and in the chat. If you have questions, post them there. Nick, I see you have a great question. I will get to all of these. I do just want to cover a few basics first. So Windra, I'm curious, how would you say you're different from other competitors out there? Obviously, Pendle launched a couple weeks, I think, before Element did. Alchemex is somewhat of a variation on tokenizing future yield, and then we have AP Wine or App Wine coming out in the next few weeks or few months. So where do you think the differences are there for Element?
Yeah. So we've kind of been looking around the landscape a lot. We looked at different various protocols and how they kind of approach attaining fixed rates, or basically how they tokenize future interest. For one thing, we do not have anytime redemption. I think a lot of these other protocols allow you to kind of redeem your assets out at any time. We basically force users to, I basically have the assets locked and working to generate interest for the users throughout the entire duration period of time. But even though the users have the flexibility to exit their position, so I think that's one differentiating factor. But also our yield tokens are accumulating interest in a different way. It's always it starts at zero, plus the premium, but also starts to accumulate towards the expected value of the average APY between that term, as opposed to kind of going from 100 to zero as it starts to decay. So those are just some minor differences in terms of how the mechanics work. The reason that we chose that route is because an asset that accumulates value is a much more, in our opinion, when we talk to traders, it's a much more attractive asset for them to essentially take a position on, right? If you want to buy an asset and it's decaying in value, it's not as attractive. But then when you buy an asset that's I would say increasing in value, not only do you get that, that I would say 50% premium to expected 100% value of the yield token, but you also have the upside, right? In the event that the interest accrues to a higher percentage. So, that is one. Additionally, you could, you put it into a lending protocol, as a collateral. All those different things are some of the aspects that we really consider. We consider composability a lot. So, an accumulation of value is a much more significant, I would say, attractive trait for some of these lending protocols. So those are just some of the differences. And
Yeah.
you mentioned Alchemex, right? Alchemex, they're like a lending protocol that utilizes, like a self-repaying loan. We've actually created some in-house products that utilizes our primitives to work with a repaying loan. So if somebody wants to generate a fixed rate interest and then have that fixed rate portion repay back their loan, they could. So in that sense, I believe that we're very synergistic with the protocol like Alchemix, and we're big fans of their team as well. So we talk to them. We have a group with them and everything. So yeah,
that's great. So just to be clear, you do plan on deploying some type of automated liquidation-free loan that gets paid down automatically over time? Are you planning something like that, or you're just in the testing phase right now?
We're planning on initially sharing the idea with protocols that do that first, like Alchemix.
Gotcha.
And then because we're like, hey, this is how our design works. Curious to hear your thoughts, and if they it's not really something that they're interested in, we will definitely share it with the public to see if anybody's interested in building it themselves. And then if nobody's interested in that, then we'll of course build it in-house. We always want to incentivize others to kind of build, something that's more of their specialty. And then while we kind of focus on our specialty, which is building out these two primitives.
Awesome. So the main reason I did an AMA or want to do an AMA and talk to you guys is I was in your Discord and just chatting and learning more about the project while I was researching it. And one of the things we were discussing was how, in your mind, Element factors in time-based pricing towards the tokenized yield. Can you talk a bit about how Element does that, and then perhaps some competitors don't, and what you think the advantages and disadvantages are?
Yeah, sure. So I think the biggest discussion around that is, the fact that if you look at all these various different protocols that are tokenizing yield, the discounted part of the principal token, which is the token that you own for your base deposit, plus the premium of the variable interest token always equal 1, right? Anything above 1, you can just always mint assets, just sell right away and arbitrage that opportunity. But when it is demanded to be 1 in terms of the discount plus the premium, then the market doesn't necessarily, in terms of buyers and sellers, the market doesn't really determine what the price is. The protocol determines what the price is, because the premium plus the discount always has to equal 1. Otherwise, there's no incentive for anybody to mint, because if I can mint today and a minute later I can't, I redeem and it's at a lesser value, then I wouldn't have an incentive to mint, because I'm losing money right away. But if I mint today knowing that I have an asset that's not redeemable for a month, then that less than 1 value is justified, because that's that illiquid discount. So this, gap between the discount plus premium minus 1 becomes an opportunity or an incentive upside for buyers. Because if for example, I'll give you one example. If the fixed rate drops the principal token price to 97 cents, the yield token price has to be 3 cents. It has to be, because that's 1, right? But what if the market sentiments for future interest rates indicates that they believe that the overall expected value of the yield tokens is less than 3 cents, but at the same time, buyers of the fixed rates do not want to go below 97 cents, right? Now, what ends up happening is there's just no buyers in the market. Instead of, people just go look elsewhere for different opportunities, because the protocol is demanding these prices. But because there's now a gap between, 1 and these different sums of principal token and yield tokens, now there's the opportunity to bring the premium of the yield tokens down to maybe 2 cents, and the buyers have an incentive now to just kind of speculate on that upside. So time here and risk of speculation is, becomes a stronger variable and component of the entire market. Therefore, it benefits the buyers more, which is what we're trying to do. We're trying to incentivize buying of these different primitives, because that generates a lot of trading volume. Because when buyers come into the market, then sellers kind of assess their opportunities, and then sellers will mint and then kind of bring more liquidity into the market. So that's how we always approach different things. I mean, we've approached product construction and protocol, engineering around the perspectives of buyers and sellers, and we want to give them the ability to really assess the market and determine what the prices are, rather than the protocol itself.
Sure. Actually, on a similar note, I'm curious what you think. So Pendle incentivizes liquidity for their yield tokens. Obviously, when there's incentives involved, perhaps that changes the price of the yield token and increases what the market's willing to pay for that yield token. I don't mean to pick on Pendle here. I love what they're doing. I'm sure you respect what they're doing as well. And I should note, I'm having them on next week to talk as well. So we're going to get both sides. But I'm curious, what do you think about what happens in the market when you incentivize providing liquidity for yield tokens?
Yeah. So, this is I think this is an extremely tricky situation, because right now, Element functions really well as an oracle for the sentiments of the interest market, like where people think the interest rates are going, and any additional variable that gets added into this entire system just starts to really skew that data one way or the other. So, in terms of incentivizing rewards, I think in any other protocol would really have to think about how to do it in a way where it doesn't, skew with how people want to be able to, long or short the variable interest or the fixed rate market. So, we think about this a lot. We think about all these various components and how, there are different ways to incorporate. I'm pretty sure there are creative ways that we haven't even discovered yet in terms of how to incentivize users, but at the same time, not really mess up how the oracle's functioning in terms of indicating where the interest rates are going, or where people feel that the interest rates are going. So, that being said, Tien's a great guy. I've spoken to him before.
Yeah.
And so, everybody has different approaches and, different ways of bootstrapping the protocol. We just feel like this is a much more conservative way, and really just kind of we want to get the data out there, right? We want people as well as ourselves to be able to analyze organic traction, organic interest rates, to be able to kind of make decisions based off of how they want to trade those interest rates.
Awesome. So switching gears to our first question from the audience, I'll just highlight the question here. What different implementations can you think of, or do you have planned for Element, and what are you most excited about there?
So, that's a great question. So, some of the different implementations that I personally am excited about is just the increasing the overall usability of a principal token to extend to more than just fixed rates, but also the usability of a discounted asset. If you think about a cash and carry arbitrage, against futures, if I have a future that's expiring at the end of this month, or maybe at the end of September, for example, and I want to kind of cash and carry arbitrage that between that and the spot price, as opposed, instead of just buying spot right now, I could buy a discounted asset of the same, asset at spot, and then carry it over until the futures maturation, and basically not only benefit from the arbitrage of spot and future, but also the discounted portion. So that's one usability that I think extends beyond just fixed rates, because that is extending towards discounted assets, but also things like making vaults or finding strategies around options as well. I think recently Ribbon released a yearn interest-bearing USDC vault, which I think is amazing.
Very cool, yeah.
That level of composability is awesome. And I think if you think about a European cash-settled option, basically you have to kind of carry an asset until maturity. If I want to write a covered call European cash-settled option for the month, ending in the month of September for Ethereum, I can buy a discounted Ethereum now, carry it over until the end of September. Now I'm not only benefiting from the premiums that I've earned between now and September, but also that discounted portion, right? Or even that discounted portion could be split between the buyer of the option and the writer, which is me. So those are some implementations that I think are very cool. We've talked to a few lending protocols as well that are interested in having principal tokens as collateral, because they function as a really nice, interesting way, form of collateral, similar to, traditional bonds. So those are some things that we're also particularly excited about in terms of implementations, just an additional variable in the market where users can kind of see the discounted value of fixed rates. And if that's something that's attractive to them, they'll sell their assets and get that fixed rates. But otherwise, they could also observe the lending rates of these principal tokens, right? If they can supply those principal tokens as a collateral and borrow based off of the current lending rates, that's also a different avenue that they'll take. So those are just some implementations that I think I'm very excited about. I'm not sure if that answers the question.
Yeah, awesome. So we have another question from the audience from Filippo Fannin. Really just asking, do you plan to increase the range of the products you offer? On that note, I was, of course, going through your docs, preparing to create the video I did for my channel. And one of the interesting implementations you talk about is building a ladder, similar to a CD ladder in traditional finance. So are those things you plan to implement in-house, or are you okay letting the market build those or do it themselves?
So the latter is a little bit more complex, because I think our head of smart contract, Paul, will probably go into the details of the complexities of that in an upcoming blog post. But yeah, we do plan on kind of researching like yield ladders to kind of show some of those functionalities and build out some of those products. We've thought about principal protected product a lot, because they use discounted assets similar to like a zero coupon bond as their base primitive. We've even extended a principal protected product to something like a CPPI, which is like an automated rebalancing principal protected product, where if the fixed rates today are 5%, then anything that's the spread between that 5% to 100 could be buying into a variable A strategy. But if the fixed rate for next month or the month after is 8%, that additional 3% generated from the fixed rate buffer could be generated to a variable strategy B. And that automatic rebalancing of the principal protected product could be set by any, DeFi, I would say DeFi fund manager, which is what we're trying to enable with some of these primitives. So yeah, we do plan on increasing the range of products. We released a blog post on, 4 to 5 different products about a month ago. It's a blog post series, so we'll have a few more coming out. and we have about, I would say, maybe 18 to 20 different products that we came up with. We ideated with external sources, people from our community, came up with really cool product ideas, and we're happy to share those things with everybody, when we get it on paper.
Awesome. Yeah, no, that's great. So I have this theory about DeFi where I think in the next few years, as DeFi grows, as volume comes in, as institutions come in, we should expect to see the rates we see in DeFi, specifically for stablecoins on legitimate protocols and projects, come down to what we see in like traditional markets. I think the risk-free rate that the Treasury sets, it makes sense that, well, DeFi gets adoption and institutions come in, the rate we get on stablecoins should go down, and that's like part of being a healthy, efficient market. What are your thoughts there? Do you think that's going to happen? And if so, does that kind of limit the appeal of Element if the yields compress like that?
Yeah, I do think that the yields are eventually going to come down. I don't think they're going to come down as hard as, as you see in these high yield savings market of like a 0.5% APY. The reason that I think it's not going to go down that far is because, if we kind of look under the hood of a lot of these, traditional markets, savings accounts, with their less than 1% APY. Yeah, the product construction is, this person takes a cut, that person takes a cut. The initial base APY is probably around 8 to 10%. Even when we just recently mentioned principal protected products, when principal protected products, the variable strategy portion of that principal protected product typically goes into options. And people who construct these principal protected product themselves take about like a 10 to 15%, when they
Wow.
created these structured products. So it's a huge cut that these guys are taking. And you can talk to anybody who, used to sell these principal protected product. They take a huge fee from some of these. And what's interesting about DeFi is you're able to unpack, who takes what percentage of the fees in these products. And then at one point, when you start to unpack all these different products and realize that everybody's taking a cut, somebody has the ability to start over. Somebody can go back to compound again and say, hey, look, I'm going to rebuild a new product, just take a small fee and start to sell that into the market. And that's going to be like a one layer of fees as opposed to 10 layers of fees that drops the interest rate from 10% to 1%. So, I think that's the power of DeFi, right? Just the transparency, the ability to see through the structured products, and see who's taking a cut and who's not.
Awesome. So another question here from Nick. When do you think the community can vote for new assets that get added on Element via governance? Obviously, probably the most common question you get is, when is there going to be a token? I think people in our innovation Discord know me as the person that says, well, if they have investors, if they're a popular project in DeFi, it just makes sense for all parties to release a token. It just aligns incentives better. It's a way to reward the team and investors. It all just makes sense. Is there anything about that you can say publicly right now? If not, obviously we understand. But on that same note, even if you can't talk about a token, can you talk about a way just to add governance to the project and get the community to vote on different asset types being added?
Yeah, so voting in new assets will be a part of governance in the future, and we actually just announced a couple of days ago that we will be speaking at ECC about the topic of governance. We're
Oh,
introducing
wow.
our new governance primitive. It's a new framework that isn't really a copy of anything that anybody is doing right now. So when that recording comes out, I'm happy to share it with you. Because so kind of, Paul and our team is going to be talking about some of the implementations that we're bringing into governance. In terms of how to participate in governance, we want to make it as fair as possible, right? We want to ensure that everybody who either dedicates capital or time in terms of value is able to kind of have a say in the
Sure.
way that things are ran in the protocol, and to kind of just encourage decentralization as much as possible. So that's probably as much as I can say.
Absolutely, I understand. No, that makes sense. But so on the same note, what's the 5 to 10 year plan for Element? Do you anticipate that this will kind of follow the exit to community model we see with like projects that create a huge treasury and then have bounties for different developers to contribute and allow the governance to kind of direct the project? Is that part of the vision, or do you think the team will be active building at Element for the next 5 years?
We I think the the long-term plan, 5 to 10 years, is to, of course, fully decentralize the protocol and have the community run it as a DAO. Issue grants. Incentivize builders. The team. Of course, we eventually will try to transition into something like that, into working for that DAO, or the protocol itself. Incentivize users to build. Also assist in building, or also do business development on behalf of that protocol to ensure that more people come in and kind of like get user acquisition and so forth. The short, 2 to 3 year plan, we're trying to get integrated with custodial solutions. Because we talk to a lot of institutions, and they're
Mm.
all, to be honest, we have a lot of interest. But one of the things about institutions and retail is that they don't hold their own assets. They have custodial solutions do it for them. So, we have to get custodial support first, right? The moment that custody support can support principal tokens, then effectively all their clients can hold fixed rates. So, that's like our 2 to 3 year plan. Just get a lot of distribution, get a lot of support on that end, focus on, partnerships with on ramps, so that everybody can have accessibility to the fixed rates. And that's ultimately what we've been focused on since the beginning. Just how to create a new value into DeFi. We don't really want to extract any value from existing protocols. We want to create new ones. We want to tap into the source of unused, of unused capital, but also people that just have their assets sitting on Coinbase for the past 2 to 3 years that want to get yield on it. So that's our target audience, I think, in the long run.
Awesome. Switching gears a bit, I know we have a lot of developers that will watch and are watching live right now, and we have a lot of builders just working on their own projects. Can you share a bit about the fundraising process, what that was like? Obviously, you have some great investors backing Element. Can you just share a bit about that process if you have any recommendations for people looking to raise money or build their own projects?
Yeah. I think that fundraising is something that, well, the thing is, everybody, especially as a builder, you're a professional developer or builder. You build products. You're not necessarily a professional fundraiser or deal negotiator. So, on the venture capital side, they're professional deal negotiators, deal structures, and so forth. So, I suggest people who are interested in fundraising do definitely take their time and put a lot of time and effort into this whole part, because this essentially sets you up for the entire future long run of your product development. So, you know do a lot of due diligence on the people that you want to get involved in your cap table, because I think that treat them as a partner rather than an investor. And I kind of ask yourself, and this is a question that we asked ourselves when we were doing the fundraising. It's, would you want to work with this person for the next 3 to 4 years, 5 years? And we had to ask ourselves that with all of our investors, and we had to say yes to all of them before we put them on the cap table. So, of course, it's a very stressful process. Of course, it's a lot of back and forth with investors, but yeah, I think if you want to get the ones that want to fight for you, will kind of like die on the mound and believe in what you're building, and kind of like fight for your team. I think that's definitely some of the things that I took away from our fundraising process for anybody who's interested in fundraising and building their own DeFi product.
Yeah, one thing I want to ask a little bit more about is I think what we see on Twitter a lot and in different Discord communities is there's a lot of animosity towards VCs. There's the perception, whether it's true or not, I'm sure it's true in some cases and not in others, that investors, they just dump the token as soon as they can, because rightfully so, they're getting a huge return on their investment. If they're purchasing something at a $40 million network valuation, they can, when it launches and there's a token out there and there's a market on Uniswap, they could have an easy 10x. So, what are your thoughts there on how the investors have supported you, other than just financially? Just one anecdote from myself working on Brink. I think we've had a lot of support aside from just the capital, and it's been extremely helpful for us just to have those advisors and the resources there. So, I think the community and the general consensus in DeFi might be a little misguided there, but I'm sure people that purchase a governance token that has a sharp decline in price for whatever reason, I understand they're upset there. What are your thoughts there?
Well, so this is a big discussion. This has been going on for quite some
Yeah,
time, and even more relevant yesterday when there was that big sushi discussion about sushi wanting to raise
right.
60
Yeah,
million, right? Um, I think that there's not a lot. I mean, I think having spoken to a lot, having experienced, interactions with a lot of different VCs and funds, um, I think conservatively maybe 90% are just LARPing. They're just thinking about the next thing, moving on to the next thing like a quick flip. Most of them don't have like a traditional venture capital background. They have never like really bootstrapped or incubated a project from start to finish. So and that's hard. That sometimes you kind of have to assess the value of that specific VC. And you can do that by maybe asking some of their portfolio companies, the existing investments, be like, hey, how's your experience been working with this VC? How's your experience been working with IVC? And we actually did that when we were doing our fundraise as well. We asked maybe 3 to 4 or 5 different portfolio companies of that specific VC to see how, if you were to rate, you know, the top 5 VCs that you worked with, who are they? And we kind of just collected all that data to kind of see what people's different perspectives were, to kind of reach a really, I would say qualitative, decision on who we should go with. But yeah, I can see why people feel that way. Mainly because like I said, a lot of different funds that aren't necessarily VCs or don't necessarily act in good faith of a venture capital, pretend to be one. And those small, I wouldn't say small, but those poor agents start to really get magnified and become the example for people,
Yeah.
for big funds that necessarily are pretty quality and have a lot of value that they bring to a portfolio company.
Yeah, no, that's a great answer. I see a very interesting question that I don't think I've seen before from Fud0. He's asking, so there's many Middle Eastern countries that, of course, follow Sharia law, and there's specific rules in finance and banking where earning interest is considered taboo. Obviously, that's something very relevant to element finance. Have you thought about, as Fud0 asks, as the messaging of DeFi products could help onboard people that might be excluded or just might not be able to invest in something like Element?
Yeah, this is actually an interesting question and something that I've actually experienced before because
Okay.
for I would say the past 3 to 4 years, I actually was living in Malaysia for some time, and that's a predominantly Muslim country as well. And they think about Sharia law and investments that are compliant with that type of religion, vision and perspectives quite often. And so, I think the messaging of DeFi right now, it's too early to be applicable to some of the applications of Sharia law, but it's easy. I would say it's a lot easier to be framed in that
Hmm.
way because it's so transparent. The issue with I would say investments that don't qualify for Sharia law is that it's kind of a black box. You don't know where that money is going to. You don't know who it's being lent out to. But with DeFi and with blockchain technology, you can see exactly where your money is going, and it's a lot more transparent. That way, people who are investing in some of these things, if it aligns with their religion, they can see exactly who, where those allocations are and those assets are being allocated to, essentially. So it's a lot easier, I would say, of a pathway to appeal to that user base.
Gotcha.
And
So one question I like to ask people building in this space is, how can you ensure that something like Element's product in 5 years from now or 10 years now doesn't become commoditized? What I mean by that is like I like to just think about a lot. What happens to Curve, for example, when the day after liquidity incentives run out or liquidity providing incentives run out, right? Can someone just fork that code, like just a complete copy paste of the code, mint a new governance token, attract TVL that way because now Curve is missing those incentives? Obviously, we see Uniswap is no longer providing liquidity mining incentives, and they're the biggest DEX. So there is a way to do it, but I'm curious, how do you stop a project like Element from becoming commoditized, where let's say there is a governance token, there's some incentive there, but when that runs out, what do you do?
Yeah, no, that's a good question, and I think this is essentially like a defensibility or a moat question. Like,
Yes.
how do we build our moat? Um, I think number one is composability. I think that's why if you're quite active in our Discord, so you see how we make a really big push for product development and building. We try to attract as many developers as we can. We think that composability is a moat. I mean, if there's 10 different products built on top of us, that's those are things that help solidify us as being the base money Lego and DeFi, right? It's the same way that I view Yearn and Compound. I'm sorry, Aave and Compound. Even
Yeah,
though they're somewhat of a competitor, they had to coexist for an aggregator like Yearn to come in and solidify those two as kind of like the base money Lego of DeFi. And same with any other products that are building on top of those two, they require that optionality. When you have optionality, then people can kind of aggregate and really solidify your place. So, we incentivize builders to build on top of us, create multiple products. That way, 5 to 10 years from now, maybe we might have 50 or maybe 100 products that uses our primitives. That's how we kind of solidify our staying power in DeFi and in the space.
gotcha. Just a quick note as we kind of wind down the question. If anyone wants to submit anything in the chat, please do so now. I just have a couple last questions. So if there's anything in the comment section, I will get to those. But so Windra, I'm curious. We talked about your future goals and whatnot, but can you talk a little bit about the asset pipeline of what you're thinking of bringing on? Obviously, like pure ETH is something people are interested in. I'm sure BTC. Can you just talk about how you're going about deciding which assets to onboard next? And is the decision based on how popular the asset is or the market cap or really the yield you can get there?
I would say it's a little bit of both. Like, for example, these first few assets that we onboarded were just purely, as experimental to really gather data in terms of what users are attracted to, different terms of the same assets, high variable APY assets, low variable APY assets, STE, see how people were interested in those
Yeah.
type of assets. We have, I believe we're announcing this pretty soon. We're going to have DAI next Wednesday, which is just
Okay.
vanilla DAI. We're aiming to have USDC out, several weeks after that. And then, of course, we're looking to also onboard ETH and BTC, WBTC, as a base asset as well. So we kind of have a little bit of both. We have, high interest, complex, not complex, but just, curve assets that go into Yearn as a base asset, but also have these vanilla assets that are a little bit more understandable for some of the retail or non-sophisticated DeFi users. People can just
Yeah.
deposit USDC and DAI. So, in terms of what the roadmap looks like beyond this USDC DAI, BTC ETH, and Alchemix USDC, USD. We're not fully certain yet. We have to kind of really analyze the data that we've gotten internally, how the markets have been behaving, and then we probably will get the community a lot more involved. Like we tried to do that like last week. We tried to poll, right, what is the community interested in, and we're probably going to be
Yeah.
doing a lot more of that in the future because we really want to get them involved.
Yeah, two quick follow-ups on that. The first, I'm curious, are there any, I guess you could say, non-traditional yield generating platforms you're looking at? Obviously, Yearn is like an extremely popular one to get a yield on your assets because it does a lot of the work for you. And of course, you've used Curve, but are there any other places you're looking that seem like they're reputable projects, they're safe projects that give you perhaps a higher yield than some of the traditional projects or protocols?
Yeah, definitely. We've had a lot of inbound requests,
Yeah,
in terms of conditions. I think what people when we went live on mainnet, people saw just the level of composability that's possible here in terms of integrations. So we've had a lot of inbound requests. We were looking into all of the different, possible other yield generating protocols that are out there aside Yearn. But every single integrations with those protocols require a heavy level of auditing, coding and so forth.
yeah,
So and our team takes security, extremely seriously. So we have to, that's going to take some time. Yearn took us, the auditing to kind of route into Yearn assets took us about a month, close to a month in terms of auditing. So I would say the timeline for us to get integrated with any other protocols that also generate yield would also fit in that time frame.
sure. No, that makes sense. I'm just thinking, like, kind of spitballing here, but have you ever considered, or is it something you've discussed of letting end users or market makers kind of borrow the assets or use the assets that are deposited and just see what they can to maximize the yield themselves and offer that to offer anyone to kind of be their own market maker for generating yield. For instance, if I think I can get a consistent 10% safe yield on ETH, I can try to provide that for the user, and my yield tokens will be worth more. Of course, they'd be responsible if something happens and they have to return the ETH. But have you thought of kind of opening this up, just letting this be a platform to kind of exchange yields and compete to see who could get the highest yield independently?
Yeah, I think that probably could function or fit into the principal protected type of product, like a structured product that a
Yeah.
user can offer, right? If a user wants to create a product that is tailored towards manual settings by a fund manager, they could deposit their assets into that specific product, and then that fund manager has their own different risk thresholds and dials, and generate their own variable APY. And of course, that specific position could be split into the variable side and the principal token side. So definitely is possible in the future for us to essentially enable DeFi fund managers to be a lot
Yeah.
more proactive in their own different strategies. It is definitely possible in the future down the road.
Awesome. No, that's exciting. I think this will probably be the last question unless something else comes up. But from the audience, Pawn Johnson asks, do you envision yourself as the next generation of banks? If so, how do you expand the benefits of DeFi to the unbanked and undeveloped countries? Obviously, it's a very interesting question. In DeFi, we're trying to create open access, but at the end of the day, these are very sophisticated projects. You have to be pretty technically savvy. You have to know a little bit about economics, and you just have to be in the right place at the right time, kind of. So, what are your thoughts there?
I think like Maker is like the next generation of banks, right?
Right.
I believe that we are the next generation of probably the interest rate market, fixed and variable rate markets. We could be the next, we could definitely be the next generation source of some of these, banks that offer a high yield savings account, where they could just tap into our discounted assets to get high fixed yields for their users. So I would say the bank is probably like the middle layer between the users and us. We're the source of that yield.
Sure.
And yeah, but I do think that we're somewhere down that chain as well. I do think that Maker is probably a better example of what the future of banking is going to look like.
Awesome. Well, I don't see any more questions from the audience, and that's all I had prepared. So, first off, thank you, Windra. It's been a pleasure learning about Element, hearing the differences with other platforms. If you're interested in learning more on Element, I believe I have the website link below that you can check out, or you can just Google Element Finance. The Twitter should be below as well. And then I think your best resource is probably the Discord. I think your team is just very active there. I got quick responses when I had questions and was trying to figure it out. And then lastly, of course, I have a video on my channel about Element, but that's all I have. Any last comments, Windra?
No, I think you pretty much nailed everything. Thanks for having me. Yeah, please join our Discord. Ask any questions you want. We try to be as responsive as possible. We value our community a lot, and we try to encourage, of course, healthy discussions and like in-depth discussions about how everything works. But yeah, and we update our news quite often in our Discord. So please join our community.
Awesome. Well, thank you all so much for watching. Wherever you are, I hope you have a great day, great evening, and we all look forward to seeing you in the next one.